I think I'm going to get my Aussie Kiwi on, mate. It looks like it might well have just put in a bar, which is going to keep me out. Okay, we are live on YouTube, and welcome to everyone. Jeff and I are both trying to just work here in the background. I'm looking at this Euro Aussie for a trade, and sorry, Aussie
Aussie
Kiwi.
Kiwi.
Oh, you're I can't even think what it's called now. Aussie Kiwi for a trade. I just want it a little bit higher. I want it up here. I'm going short, and I'm going to put my stops up at this level here, just to sort of like make sure I'm well out of the way.
I
So
don't
about a
know that
third.
I've got your screen, mate. No,
Oh,
I haven't.
sorry. Here we go. Let me do this. Um, we're straight in here. Straight in. No messing about, guys. So the trade is short on Aussie Kiwi. The price is, I'm going to write it in, just try and get my trade on 1.0598 with a stop at 1.0625, let's call it. 1.0626 actually. So I'm just going to try and get this trade on, but I can't quite do it. That's why. That's why I messed it up. 1.0. 1.0598. Okay, that's better. That's better. Okay. 1 second. I just need to make sure my numbers are right here. So that was a pound. Okay, we'll do that. So it's 0.1. Right. 1 second. I haven't quite finished yet.
He's having fun, yeah.
Sorry, I'm just trying to put the order in the market. And then I'll give you guys the proper parameters. 0.1, that should be right. I need two of those. Stop loss at 106, 106.26. That's 106.26. Yeah, 106.26 for the stop loss. It's a pending order. It's a sell limit, and it is going to be at 1.0598. That should be right. I'm just going to press that in 1 second. Just I've got to make sure my levels aren't right, so I don't go in 10 times multiples. That should be right, I think.
I've
That's
had high
there.
crystal, not short Kiwi crystal. It's short Aussie Kiwi.
Short Aussie Kiwi, yes. Short Aussie Kiwi. And I will tell you the numbers as soon as I get this trade. 1.0598. 1.059, sorry, 1.0626 for your stop loss with the sell at 1.0598. 98. Let's make sure that's going in as well. That's right. Now I've got to do my other account really quickly. 1.0598, 1.626. Place that. And I'm going to do the same again. And then I
Hard
can
work,
give
this
you.
trading, isn't it?
Oh man, I'll tell you what, when it's 1.0626. Oops, that's wrong. 1.0598. Stop loss 1.0626 and 0.
Morning, Helen. I'm in afternoon, Helen. Thank you for recognizing the
That's 1.
different time of day. It must take some time for you to work it out.
1.0598.
Well, it's the same every day, though, I suppose, isn't it? Yep.
1.
I'll take that back.
Oh, I can't get this on. 1.
Do you want me to do something whilst you're having a fiddle, mate? I can put the pound on.
Yeah, I've just got yeah, if you wouldn't mind, mate, let me give you the screen and I will I'll come back to you guys in a second when I've got the parameters here. The numbers, if you need them, are 1.0598 for the entry. So just a little bit higher here. And then the stop loss at 1.0626. Ah, there we go. That just wasn't quite high enough. Oh, I see why. Okay. That's on. Okay, I'm all right now, mate. Okay, so I have got two orders in the market. One of them I don't think the guys can trade. The other one I think you can. It hasn't quite pipped me in there, but let's see if we can get this price. Okay, so let me show you guys the levels. I will write them up for you here. Oh God, I can't even get on Zoom now. Can't even get on there now. Zoom gone. Ah, there we go. Cancel that. Share screen. Here we go. Right, here are the parameters. I will type them up for you here. So we have entry at 1.0958. Stop loss is 1.0626. And take profit is 1.050. 1.050. Oh, there you go. There's your parameters, okay? Entry at 1.0958, stop loss at 1.0626, and your take profit is 1.050. And I'm just playing the rejection off the pivot, but you can see here on the 15-minute chart, we have broken this area here, which is why that's where I'd quite like it. There doesn't seem to be any too much positivity, trying to get back above this level. Stops are above this level because I could do them up here, and there's obviously going to be a lot more profit, but because my target is down to this area down here. Hold on, let me just build this up for you guys so you can see it a bit easier. Here you go. This is the chart here. So I'm looking at the 15-minute chart. And the 15-minute chart is broken down, and significantly it's broken under this this daily pivot, which is what I quite like. So stops I've put above the high end of the trend line up there, but it doesn't mean that I won't necessarily remanage this if things start to break up at this point. But it's going to cost me a lot less than a percent. But it means I can put on a whole percent if the on the trade if I can get in. I don't know whether it's going to pip me, and looks like I might miss it by a couple of pips at this stage, but we'll see. Now, when we go to the 4-hour chart, which is really where I'm trying to look to take my profit, then you can see down here, actually that monthly pivot is going to be problematic, isn't it? Let me just see. Yeah, that still makes it worth it. That's actually should be our take profit down there. So 1.0528 is going to be the take profit. Let's do it there, because I think that will still give us a nice 3-to-1. Pretty much 2.5 to 1 if we can get to that point. So let's go to this point here. 1.052. Just double check that. 1.026. There we go. Okay, so I think those parameters are around about right. So we just got to get taken into that one, see what happens. So let me know if everybody's got those numbers. Should it be 1. Yes, 1.0598, Brian. Sorry, just seeing your things now. Oh, sorry, what have I done? 1.0. Sorry, yep. Yeah, sorry. Sorry. Well done. 1.05. That's because I'm rushing. 9. 1.0598. That's what it should be. 1.0598. Yeah. That's the entry, 1.0598. Now, I don't know if we're going to get pipped in or not. It looks like it might just elude us a little bit, but a little bit of a spike would be brilliant. You know, if it just wanted one more bite of the pivot there, then it would be fine. I wouldn't mind getting into this a little bit lower, a couple of pips lower. Like, this price isn't too bad, but my issue now is I've got 4 different trades that I need to fix up. So I might well just shift them down just a little bit. Let's put it down to 1.096 just to see if we get a chance to get in here. So I might just quickly pass to you, mate, just while I fix these orders up just a little bit, because I've got to do it on a couple of accounts here.
Right, bud. I will take it.
Actually, yeah, you take it. Yeah, you take it.
You'll have to. Yeah, cool. Rightio, the pound US dollar beta test trade for today is this one. It's up there on your screen. The OCO is a sell at 1.2414 with a stop loss at 1.2491. And buy is obviously the reverse of that, 1.2491 with a stop loss at 1.2414. Now, those of you, and I detect there probably are people who haven't seen the parameters around this trade before. What we're seeking to do is get the breakout of the last 3 1-hour candles prior to London Open. Today, that just happens to be this bar by itself. That's often the case, actually. So we go high of, pardon me, the high of this bar here, and add 15 pips to that, which gives us our 1.2491. And we take the low of this bar, which is 1.24242. So we call that 1.2424. And we take 10 pips off that, and that becomes our sell entry. So 1.2414 is the sell entry. The stop loss is the entry for the buy, and the stop loss for the buy is the entry for the sell. Okay, what is OCO? PL1 cancels other, and I'm just getting to that. So if the long is triggered, we cancel the short. And if the short is triggered, we cancel the long. So we don't leave both trades in the market once we are triggered into the trade. Once we are triggered into the trade, we then trail on a 15-minute chart. And let's go through Thursday's trade, which was a loser, and show you what I mean by that. So here we've got the range of the last 3 bars prior to London session. It's always the 9 o'clock bar on my chart. So that was Friday. This was Thursday. We're looking for the 9 o'clock bar. It's probably not that one. What time have I got there? 7, 9. There it is. So there's the bar, but we've got the 3 bars prior to London session, right? 3 1-hour bars. In this case, that's still inside this low. There's your high, that bar there. So we go 15 pips above that high for the long. We go 10 pips below the low of the range, which is this bar here, for the short. So we were entered on this bar here, terrible entry, as you can see. And the daily pivot did the rest, took us out. That was a loser, as I said. But what you need to do is, let me just mark that entry. It's there. Once you triggered, as I said, we triggered short, so you've got to cancel the long order, and you go immediately to the 15-minute chart. Once you're on that 15-minute chart, we trail 2 seller bars in this case. So here's where we were triggered, right, in this bar here. And as soon as we see 2 more seller bars, we trail our stop to that point. So our stop loss was very close to where today's entry is by the look of it. So we'll just use that as the stop loss. Once we've triggered, they're triggered on that bar, we wait for 2 seller bars. And we got only 1. We didn't get 2. So had we got two like this one here, 1, 2 in a row, you move your stop down to there. The next two, move your stop down to there. The next two, move your stop down to there. Next two, move your stop down to there. And now I think that was our exit the day before, actually, for a winner. So that's how you do it. I will, if we get triggered, I'll take you through that again in need. Now, I repeat, this is in test mode, so do not trade this with any real money on the table. When I say real money, I mean you can put micro lots on it if you wish, but you don't want to be trading this at, you know, 1/4 or 0.5% or anything like that until we actually get the formula right that says, all right, this is actually the way to go. We're in our second trimester, if you like, of how to do this. I've got one more to go, but we've still got, I think, 6 weeks or more on this one before we call the next parameters into the play. No filters added to this. It's simply a breakout of the last 3 bars, and it's as simple as that. Rightio ho ho. Pound. If I was trading the pound today, other than a breakout, what would I be looking for? Yeah, I don't think I'd like to be trading it short just yet.
Yeah, do you know what? It's interesting with the pound. I've had a really good look at the pound today. I've entered a short in the pound, but it's against the Polish. Which one was it? The Polish zloty.
Of course it was.
and you know, it was anything. But after I sort of entered it, I was like, I don't love it against anything else. It doesn't look to me like pound weakness, so it might not be the best trade in the world, but we'll see.
Actually, now that I go to this chart, it's changed a bit. Sorry, you go.
Well, I know it was the only thing that I could see. It was anything I could see. I don't really see the pound being hugely weak right now, but maybe because the chart setup is there, it's something that could catch up. I don't know. We do have Brexit talks on running, and who knows what could happen from there. I don't know that much about the Polish economy, to be fair, but they don't seem to be too much in the headlines when it comes down to the coronavirus. Yeah, and there was another one actually. I was looking at the Hungarian forint as well on Friday against the pound, and that seemed to have worked out.
What the spreads are on that?
Yeah, they're quite wide actually. So the Polish zloty is well, it's only 5 pips actually. It's not massive. And the Hungarian forint, I guess it's a forintine, is about 20 odd pips. It's quite wide. So what that means is when the market closed on Friday, the spread, you know, when I looked at the chart, I was like, oh, that's pretty nice. That looks quite nice because of the low. But with the spread, I was pretty much back to break even on the buy side. So it's a bit, you know, they're definitely a little bit trickier. But do you know, one of the reasons I've gone to some of these slightly more exotic currencies is the volatility is higher, so the rewards tend to happen a lot quicker. So I quite like them. You know, these currencies like the euro and the Aussie Kiwi and stuff. They're probably going to be a lot more slow moving than some of these really volatile. You know, they are more volatile currencies. That's just the way that they're
Action Man.
What's that?
Action Man.
But that's where we are, mate. Anyway, so yeah, the pound is an interesting one. Just back to your point, the pound is an interesting one because I'm with you. I don't see a lot of weakness across the board, but actually against some of those small European nations, it's a little bit. It looks a little bit heavy.
Okay. Well, when I looked at that weekly chart before, all I could see was the monthly pivot holding price up. But of course, the monthly pivot is last month's that we're looking at now. And we now have a new monthly pivot, as it were. That doesn't preclude that level is still strong. Is it, though? You like my trimester, PL? And I think it is a girl, actually. Could be wrong. But it is a baby. It's certainly a baby, this little test that we're doing. For anybody else who's got no idea what I'm talking about, PL thinks that the second trimester is a very good thing, and I'm being congratulated on that. I'm a dad.
Rightly
never
so,
know.
mate. Yeah, you're a dad of a dad of a new trading system.
That's right. So all I actually see here is consolidation, but it's a little bit broader than maybe it would first appear. What I then do is go to the daily chart and see if we can take advantage of that. Well, it looks like it's close. So if we put a little ring around it, so to speak, it's not perfect, but there's the two highs that you can see. The two lows are the issue. It's not really on, although there's a bit of a low there. I think we'll take that level. It's the start, if nothing else. So where does that lead me to? That leads me to, we've come off the top of the range. We've hit the new monthly pivot, or have, well, already the new monthly pivot's hit us. And it looks like we may have the potential for a lower high coming up. So if I were to see a lower high here, in particular, we've got an untested daily pivot, lower high here on pound US dollar at the daily pivot makes sense to me. We could then trade it short. So at least I now have a bias for the day. I've also got a bit of support coming up through there. Yeah, that's far enough away. I'm okay with it, Ash. We can go and look for a short on the pound, but we've got to get the daily pivot first. That may upset our little breakout scenario there. We'll see how we go. All right. Do you need to explain any more, mate? Or do you need to go to the FTSE? Because as you know, I don't trade the first bar of London session.
Yeah,
So,
let's talk FTSE. Let's talk global markets, because they've all gapped down this morning, and they certainly are heavy. Tension is rising between China and the United States. So let's have a look, see what we got. So we are triggered into this trade, by the way. I didn't need to move the entry in the end. It was 1.0598, but 1.0956 is still fine too. So that's where we are with that. Now, FTSE, let me just take these levels off. Now, everybody knows that we got a trade on the, well, not everybody that was in the show on Friday, but everybody knows on Friday we had a trade in the FTSE, and the trade was off this 4-hour engulfing bar up here, and it just dropped off the planet. So currently sitting around about 3 to 1 probably. Sorry, the low was around about 3 to 1, and this is still looking pretty bad. But let's just talk about where the entries are now with the FTSE, because what I was looking at was this this rising wedge on the daily chart. Now look at this rising wedge; it's a really nice pattern. And this is the thing about patterns. I will use them on shorter term timeframes if they fit other parameters, but it's much better to get these patterns on these larger timeframes. You know, that's where they were invented, if you like. That's where they were thought up, off these wider and larger timeframes. So daily, right the way through the monthly, is where you want to see the patterns really happening, and then you can trade those patterns. But this is a rising wedge. And the rising wedge is a bearish signal. So we were talking about that even before we saw that 4-hour bar. And looking around the other markets, it just looked like it was going to break down. Now that does leave us, we've now got the breakout, which is here. And that does leave us back down to these lows down here. So the target on the FTSE is around about 400 pips lower. So there's plenty of time really to get into this market. And really what we're looking for is where we can get in. And then it's you know, we're looking at the rising wedge and just saying, well, how about a test of the area? Well, that would be fantastic. So coming up to around about 58.40, which is currently around about 150 pips from where we are now, would be a really good place. But you can see in the way is the monthly pivot. The daily pivot is currently in the way as well. Do we get that today? Unlikely. It looks like a down day today. So on a short term, I think there's still some downside before we start popping up. But what we really want is a pop before it drops. You know, if it starts to drop too far under, then it's kind of, you know, it's going to be good night, and we won't be able to do anything about that. But if we can get, if it starts to drop, it's just too late. But if we can get a little pop to the upside, this area here looks like it's going to hold it up. So 57.70, so around about 70 pips up. is going to be the first place that we can consider, and that daily pivot sits there. So we'll consider here maybe going light just in case there's another run up, which is going to still be another 60 or 70 pips if it's going to genuinely test that line. Actually, let's just move this down a bit. It looks like there's just a little bit more. That puts us right on the monthly pivot. That looks like a really attractive area now, actually. So 100 pips above where we are on your charts is going to be about 58.20. So 58.20 is the price that we're after, but we might have to scale in around about 57.70. So what's that? 70 pips above. So for you guys, it's going to be about 57.90. So we'll scale in at the high here rather than the low. And then just because we've got this this rising wedge way too far away from the low here. So that's the plan really with the FTSE, is to see if I can get a scale in, but it's going to be there and there. And then we'll see what happens. Obviously, if it starts to break above, then we can possibly use the weekly pivot, but it might then come back and test and stay back inside the pattern. So have to be a little bit cautious on that. May does tend to be a little bit weak, as we know, the little rhyme, sell in May and walk away, and that may well transpire, into something quite deep. And the summer months tend to be quite weak as well. So if we can get in again here, then and if I can get you guys in here, then we should be in pretty good shape. So that's the plan right now, mates. But we can't really get in at this particular level. Tension is rising. But if we break this down, let's break down the different time frames. See what each time frame is telling us. 4 hour, that tells us that we already have resistance here. So that would suggest we should get in now. The 1 hour is just looking like it might have just broken through a level. So that is suggesting that we might well get a little bit higher up. And then when we go to the 15, I think the 15 is probably just giving us just that little bit more information where it's managing to hold on here. So as long as the 15 holds on, then there should be a little bit of, there will potentially be a little bit of upside, and then we can look to get in. Do we want to trade it long into the downside? Probably not. I think it might be a little bit too well. You could do, you could take a long to take a short, which I don't hate. Let's just see what that will cost. 30 pips, yeah, for 50. Might even give you a double bottom, which could be problematic. So it would be a little bit tentative. The issue I've got today, if I saw the stocks generally trading higher, then I'd be all right with that. But what I've got right now, when I look at my my barometers, is a FTSE 100, which has only got 20% of stocks in positive territory. The rest of them are all down. So we've got 80% lower. So the signs and signals aren't great for the FTSE for further upside at this point. Now, that doesn't mean it won't happen, because those 20 can drag it up, and it does depend on what volume is trading short and what volume is trading long. And those details would take some sort of robot to figure out for me. And I don't have the ability to have that robot. So all I know is that 20% are up and 80% are down. But as I say, we don't know what the weight of the 20% that are up has on the market when it comes down to volume, because it's forever moving. So we can't know that. But let's have a look at some of the other barometers and the other markets here. This is the S&P. S&P looking fairly similar. So when we look at the S&P on a daily chart, it also looks like it's broken through this level here. Might even be some other trend lines along here. That looks like a rising wedge as well, actually, on the S&P. There's a rising wedge on the S&P as well. It's a lot deeper. So that's got some room to come up as well, the S&P. So that would suggest that maybe a daily pivot test, ultimately a weekly pivot test as well, would be the thing. And this is the point really with the FTSE. If it touches the daily pivot today, you're going to be looking at short, pretty much for sure. But what you kind of want is for the market to evolve over the week and hit that monthly pivot, and then just kind of trigger in the short. That would be the idea. So let's have a look at some of the other barometers that we have as well. So that's the S&P. I'd want to see what the price of the VIX is. What's the VIX doing today? VIX is looking at a shade weak. Look at this on a 4 hourly. This bar here does suggest this is a genuine shooting star here. Gap up, rejection at the monthly pivot, that would suggest that we get some lower with the VIX. So that's fairly positive for some upside in the stock market for at least a period. I'm not sure where this one would come back to, but there's the trend line on this one. Trend line on the upside is maybe a little bit suspect because we've got very close touches down here, but VIX coming down to the daily pivot, that would suggest the VIX comes down as well, tests the daily pivot, maybe the weekly pivot as well. So with the VIX coming down, the FTSE and the S&P both looking like they could have a little bit of a rally today. It does look to me like that's going to happen. This is the Nasdaq, needs to also grab a look at the daily pivot as well, and ultimately probably the weekly pivot. The Dow Jones Industrials looking pretty similar, possibly comes down, bounces off the monthly pivot before it attempts another ascent to the upside, but that looks okay. And just Aussie currency, the Aussie pairs, they look like they're frozen a little bit. I mean, we want to check the yen. Aussie yen, I was looking at the Aussie yen yesterday.
Yen's come out of the blocks this morning fairly strong.
Yeah, and I checked out the Aussie yen, and the Aussie yen has also kind of broken a pattern here as well. So Aussie yen is looking like a rising wedge as well. So there's no doubt about it that the stock market is looking incredibly suspect here and incredibly weak. It's just a question: can we get a bit of a rally? Now it is coming off a monthly pivot, so let's see if it's not today, but maybe on Tuesday or Wednesday we can get some genuine downside with the stock market without really going low. I don't think we should be really fighting the gravity here, and the gravity is low. It is down. So I don't think we can go long to go short. I'd like to. I have to say it was one of my favorite trades to go long to go short, and oftentimes I will do it, but if it's maybe not in this session, maybe we see some pickup in the stock market throughout the day, and we see the S&P just turning some of those other stocks around in the FTSE, and we can do that. But for right now, I don't think we have that possibility. This is what we just had out for numbers. Spanish manufacturing down to 30.5. That is an absolutely atrocious number. So the stock market continues to be obliterated on the fundamentals. Have we not got okay, that's not ready yet. EU economic forecasts is about the only big picture news today. Cash rate from Australia looks like the forecast is going to be at 0.25%, mate. So maybe we trade into that. No, that's not going to change. Maybe we trade into that and we get a little bit of a boost. This is going to be a massive number, the ISM non-manufacturing. I thought the manufacturing number from the United States on Friday was not that bad. Let's just double check whether it was Friday. Pretty sure it was. ISM manufacturing, yeah, it wasn't that bad, was it? When you look at this, the manufacturing number actually was better than forecast, so nowhere near as bad as expected. Now it's relatively saying not that bad, but let's just have a look at what we got this week. Bank holiday in Japan, so that might just put some brakes on some of the moves today. Trade balance is going to be, I suppose, fairly interesting. This Caixin Services PMI from China is also going to be a fascinating number. They're actually forecasting for some growth there. That may well help the Aussie and the Kiwi, to be fair. And then we have bank rate policy decisions from the United Kingdom, unemployment rates from the United States, which is probably continue to be poor. We've got to look out for this number. Because the thing is, if we are looking to go long the stock market, we are not looking for these numbers to be good. We're just looking for them to be better than worse. That's a really bad way to it's a bad way to put it in there. We just want them getting better, but they're not going to be good numbers. It's going to take a while for those numbers to be good. What we want is some green shoots. So we got to keep our eye on these numbers, and as I say, we're not looking for stellar numbers here, just improvement. Maybe that's the best way to put it. There we go. Just want some improvement in these numbers. Average earnings, forget that for right now. And a non-farm employment change. That's another huge number. Look at the expectation. Jeez. So we got a big week ahead of us. In the market. So we are definitely looking for the shorts. The question is, can we get it, and can we get the price we want?
Crystal ball stuff.
Oh, the VIX Star Max is the volatility index. They call it the fear index, because if the VIX pops up, it tends to mean that the stock market is going down. You know, it's a strange one really, because the VIX just really describes volatility, and we know what volatility means. It doesn't mean negativity necessarily, but when it comes down to the stock market, it tends to. So if the VIX is popping up like it was here between the 18th of February and the 20th of March, just about, so it's around about a month. If you look at this against the S&P, then the S&P will be going in the opposite direction. So the 18th of February was here. Was here, and look what happened right the way up for a whole month until March, and then you saw the VIX start to strengthen, and then the VIX start to weaken, and then the S&P started to strengthen again. So because they're not so sandwiched together day over day, you can use the VIX just for an indicator of what's happening to volatility. And if there's a pickup in volatility, it's going to put some stress on the stock market, and you can really look at it as a gauge of whether you want to trade it or not. You know, looking at the same with the FTSE 100. FTSE 100 comes down on the 20th. It starts its descent to the downside, and it starts to pick up around about the 23rd of March. So bringing back the VIX again. The VIX is starting its ascent on the 21st of February, and it started its descent, I guess, on the 19th. So you can use the VIX. You can use the VIX as a barometer for global sentiment. It's a really useful gauge. So that is that, mate. That is the markets in 10 minutes.
What do you mean in 10 minutes? What's happening in 10 minutes?
Oh no, I thought that took me about 10 minutes. Market roundup in 10 minutes, yeah.
So you're not sharing something here. Something's happening in 10 minutes. All right, let's have a look at some currency, shall we? The majors, of course, it is London session, so we only have a look at the majors.
Welcome, StarMax.
Beg pardon?
I was just saying that StarMax is welcome.
Okay, I can't share, mate.
Oh, sorry, buddy. Helen, the VIX, no, not necessarily, because currencies are interlinked. You know, the stock market and currencies are interlinked. We will look at gold as well, because gold is interlinked. Yes, that's a good point, Fad. We will look at gold in a moment, because gold is also interlinked to what we think about the stock market and currencies. I think we're probably looking for downside gold, but we'll get to that later.
Okay, we'll start with the good old euro, and the good old euro is pretty crystal clear to me what I need to do today, and that is see a lower high. Now, two possible ways I'd like to see this happen, but there are many others, of course. Let's describe to you what I'd like to see. What I'd like to see is price find its way to the monthly pivot, then find its way back to the daily pivot and give us a lower high. If it were to do that, I think there's a potential trade for us back down to the bottom of this range. Now, that's asking a fair bit in this time frame, of course, or in this moment in time. So, and you've got to accept or acknowledge that this is only what I would like to see happen. It's not necessarily what will happen, and that's for sure. So I don't have a crystal ball, but logically to me, if we're on our way to a support level, then that support level is going to be in this area. You can see that it's been resistance all the way across here, and it's pretty close to the monthly pivot. So it's logically going to be the case that we'll go to there. The other way to look at this, of course, is an untested daily pivot, such as we have, is unusual. So always I'm looking for that to occur. So going back to my best case scenario, that is the best case scenario if that were to happen. But I'd certainly accept if price were to go to the daily pivot and then still give us a lower high based on this high, of course. So similar to what Ash was saying before, if price were to come to the monthly pivot, I'd be more than happy to go long to get short. But if we go to the daily pivot first, forget the longs, I'm only looking to trade short. So that's kind of the key to, will be my, okay, good, Crystal. Look forward to it. That's the plan on Euro US dollar. Does it actually suit my bias is usually the first question, but I'll use it as the last question on Euro dollar. And do I have a bias? So to get a bias from a technical perspective, I need to go and have a look at something far bigger than a 4-hour chart. So the weekly pivot is telling me that we last bounced off the top of the range, which means we're looking to trade short, right? Of course, that's now in a big pickle because we're in this consolidation zone, bang in the middle of this range, of course, being the descending channel. But we're at the top of that inner range, as you saw before. So my bias is still short. So I don't have a problem going short. So let's go to the 30-minute chart and see how we're going to trade it. Right up. We know that we would like to go to the monthly pivot and then back to the daily pivot. So we can actually trade either way here. But if I were to trade long, it would be at less risk than if I were to trade short, because short is our bias, right? Is this the lower high that we're looking for? Not for me. I don't really want to trade that because untested daily pivot ahead, as I said, and really have we had enough time to put in that lower high? This is really just a little reaction, I guess. Maybe these people who are in the Asia session have now taken their profit for the day. Maybe that's the case, and we really don't know what's going to happen next. So I really don't have anything here that's screaming at me, hey, get short right now, nor do I have anything screaming at me, hey, get long. The only trade line that I've got available to me is this one here. And I'll let it tell me what happens next, frankly. So if I were to break here and retest it, then the short looks a decent possibility. If I were to break and come back above it, then the long looks a real possibility back to the daily pivot, remembering we've got that high probability that the daily pivot will be tested. So it's a little bit each way here, I know, but really that's exactly what I see at the moment. There's no trade to be had here on the 30-minute chart. Dollar yen. We're out of dollar yen now, as you would, well, most of you in the room should know. Not sure if it was a great exit or not yet, because price has really hasn't done too much since. It looked like being a good exit when we were headed in this direction, but it's bounced back off whatever level. Don't really see a strong level through there. There might be something back in time, however, that's caused that to turn around again. I'm okay with getting back into this short, but I'd really like to see it off resistance as always. So I'd like price to do me a favor. And once again, I go into imagination or crystal ball mode and think, okay, the best way for me to get into this would be if price came back up to the top of the range, back underneath maybe the monthly pivot or a trend line or something that's available at this stage on a smaller time frame. This is a 4-hour chart. Then retest that area, give us the lower high that we're looking for, and trade it short, but leaving something open because our bias is short in case this carries on. So that would be the ideal situation. Will it happen? Who knows? And I'm asking for that to happen in a very long period of time if we're talking 4-hour charts. But if we go and have a look at smaller time frames, then, and my bias is short. I know my bias is short. There's no need to check that. But if I was to do that, then I'd have a look at this chart and say, right, well, we've bounced off the top of the range, which is the descending channel. We've put in a lower high. That was our last scenario. So my bias is still short. I really want to get this down to here and take advantage of this. But I thought we were going to go a lot higher than we did. Anyway, as I said, I want to get back in, but the best way is always off resistance. So I'm looking for a rally here. Now, that said, if I go back to the 4-hour chart, you can see that we've come back below this inner range here and retested it. But you can also see that we've retested, well, that's actually Friday's daily pivot, so it doesn't make any difference. But we've also retested the bottom of that channel, the rectangle, as I said. I want to see something more than that, to be honest. It is a good bar to go short on, however. Gee, so it's tempting. The issue I have is reward to risk. So if I were to trade that 50, is it safe? Yeah, it's dodgy to get, 15. It's kind of right on my boundary as to first profit level, right on my boundary. I don't want to miss it, I know, but, fear of missing out is not a reason to trade. So I don't really like what I see. And as I say, always I like to trade off resistance. So I want price to rally, get it back up to here, give me the false break, if you like, off this trend line. And that can happen on any chart. So let's go to the 30-minute chart and see what we can see. 2 pivots, daily and weekly together. That's always a very strong sign for me that price won't go too far from that level before it tests it. So to trade short from here, again, this just adds weight to the fact that I can't trade short. So I need price to get back up to here at least on a 30-minute chart. If it were to do that, I may well have good reason to trade it short from there. So price up to here, come back underneath resistance, retest it as resistance, and away we go. So on a 30-minute chart, that's entirely possible. And that's the only way I'd like to trade US dollar yen today. I do see that if we go to where to there, as I said, we can see that the yen has jumped out of the blocks today. And the worst out of the blocks today has been the Aussie. I like that. That's going into deeper retracement. If we have a look at this across the board, so dollar yen, you can see they're very close to there together today. And that's why we're seeing a little bit of consolidation, obviously. But if you go backwards in time, no point going to the week because this is the week. If we go back a month, we can have a look at the relative strength of these pairs again. And you can see that the dollar has been weak for a month and the yen is third only to the Aussie and the Kiwi, which have been rallying their little cotton socks off, bless them. And if I go back to the quarter, you can see, if it'll actually load, that the yen is still tops and still beating the dollar by a decent distance, 2.57% over the quarter. So I see no reason why that won't continue. And as I said, if the yen is out of the blocks this morning fairly well, as it appears to be, and the dollar is right behind it, this may not be the time to do it, but I'd look for that gap to widen a little bit. So that again goes to what I would like to say. I'd like to see dollar yen rally so that we can get a good trade off resistance. So that's what I'll be looking for throughout the day. Resistance either here, resistance either back up here, as we said before. That's what I'll be looking for on dollar yen. So I may not necessarily be looking at that today. It may but well be into the week. Currently sat on weekly pivot. Are we talking about dollar yen or back to the euro? Sorry, I missed those messages. Okay. It looks like we're talking about euro dollar currently sat on weekly pivot. Does that not come in? Yes, it does. Absolutely does. So it's a much better place to trade from. If you've got a confluence of weekly pivot and trend line, for instance, then what we're seeing is a stronger level than would be the trade line alone or than would be the weekly pivot alone. It's also got recency as support through here, that same level. So what I would weigh into that is nothing more than it's a strong level. And if I do get the opportunity to trade the retest of a break of it, if you like, then I think that would be a reasonable thing to do. We've already had that in a break short and a retest. So if you like that scenario, then I would suggest that that's not a bad option. But you're trading straight into the monthly pivot, so you've got to get profit into the bank, in my humble opinion, before you hit that monthly pivot. That's not impossible, of course. If you were to trade here short and put your stop above the swing, 24 pips into 17, that's pretty good. That's reasonable reward to risk for mine. So if that lights up your buttons, then I see nothing wrong with taking that position. The only thing is, and I always say this, on a 30-minute chart, when you've got the daily pivot untested above you, and you know that there is a strong probability that at some time today the daily pivot would be tested, is it wise to trade away from it? So that becomes the question mark. So in the score of positive, I can see definitely a positive, probably two positives, in that we are probably going to test the monthly pivot today. When, I don't know, but that probability is outweighed by the probability that we'll test the daily pivot, in my humble opinion. So there's two positives, one negative that I can see. To me, that doesn't equal a trade, so I won't be trading that. But if I'm wrong, you'll go back and you'll say, oh, that was a great little break and retest of the weekly pivot, we should have traded it. And I'm cool with that. But I don't beat myself up, because I've got a good reason not to take the trade. So is it a good thing that we've got the weekly pivot and the trade line together? Absolutely. Absolutely beautiful. But I need more than just that little candle scenario for me to trade it. That probably confuses rather than helps, but yes, I like the level. I just need to have the trade going right. Let's go back there, actually. Best case scenario is to take the daily pivot out, come back, get underneath that trade line or trend line, and then retest the confluence area. And even without the daily pivot test, that would be better. Break the line, come back and retest it. So we've got two reasons. At this point, we've only got one, because it was the weekly pivot. But if we add the confluence, break, retest, then you've got something to sing about, I think. Hope that helps, Simon. Aussie dollar. Wow. Can't wait. Just can't wait to get back into this. And tomorrow will probably tell the tale, in that we've got the RBA statement coming out. How do we get back into this? Well, you've got to be patient, I suppose. The daily chart's no help, except that I'd like to see the monthly pivot tested. Not essential, because it's a new monthly pivot, and it can take time for the monthly pivot to be tested. It may not even happen, but it certainly would add weight to the trade long if we were to get a rejection bar off the monthly pivot. That's going to take time. 4-hour chart is showing you a clear waterfall after this very, very nice rally that we've had. That looks very much, if you're a Fibo fan, like a 0.618 retracement. Let me have a look. Don't think it'd be far away. Maybe the monthly pivot is. No, it's bang on it right now. I don't trade Fibos, but if I were to have a punt here, then I'd say any time now is a good time to start looking for a long. That's what I'd be saying. Not now. I just don't trade a bounce. I need to have a reason to do it. So, yep, we're getting close. Something like bounce here, back up here, then retest that broken level would be pretty cool. Again, untested daily pivot. We've got the daily pivot and the weekly pivot very, very close together. So my bias is clear. I'd like to go long, and I just need something to allow me to do that. At the moment, I've got nothing. I've got a little trade line coming through here that is under construction, as I say. We've got to wait for this candle to close, and then we'd have our second test. So break here, be good, wouldn't it? Wouldn't that be good? Break here, hit the monthly pivot, back above the trade line, retest it long, take profit here, and then wait for the explosion to happen again. That's exactly where I'm at on Aussie US dollar. On the 30-minute chart, it's going to be difficult to trade long, because I know that monthly pivot is lingering underneath us. If I were to do that, if I were to trade long, I'd like it to be off support, of course. So we've got a little support trade line coming through here. This again would be ideal. Break, monthly pivot, back above, retest, and away we go. Again, take profit here, let the rest rip. Can I trade long if we get a break and retest now of resistance? Look, I can do whatever I want really, but would I? Well, we've already had it, to be honest. We've had a little break and a little retest. So that's every opportunity to actually get into that. Not for me. And the reason is the same as I just said. I prefer to trade long off support. And this is support down here. This is resistance. Won't stop me if I get the opportunity, but I don't know that this is a clear opportunity. And you're entering the market here. You're trading, well, it's not really the high of the day, but the most recent high is only 4 pips away. So it's a little bit on the risky side. The high of the day, plenty of room to take to that. Even there, if you call that the high of the day, which it probably is, you've got room to take profit. So look, it's not the silliest trade in the world if you think it's okay. In fact, it's probably an opportunity. But for me, no, I see the monthly pivot here, and I'd prefer to trade as a false break going the other way. So that's the Aussie. Look, I'll carry my bias into the week, that's for sure. There's a couple of things to look at here on the bigger picture. If we're looking at cyclicity, which I know a lot of you do because you've learned how to trend trade, then higher high, higher low, higher high, higher low, higher high, still plenty of room for this to come back, even as far as, you know, into the 63s or the low 63s. Where are we? Even if it were to come to there, into the 62s rather, the high 62s, even if it were to come to there, the cycle still remains. So there could well yet be some downside to the Aussie. And that's what I don't really want to gamble against at the moment. But a good reason, monthly pivot would certainly be a good reason. Cable we've already been through, and I'd be waiting for that daily pivot test today. Give me the lower high and shoot it short. Dollar CAD. Dollar CAD looked like it was going to put in a nice false break for us here on Friday. Well, it certainly did the false break bit, but it didn't give us the signal that we need to trade that, and that is a pullback to the trade line, of course. So that appears to have gone for now. Range, we could probably put the range in on this one. And we could probably start as far as over there and use those lows that we've just come off. So really nothing to do here. We needed to see a lower high, sorry, a higher low, and that would have been cool off the trade line. I think we now need to wait till we get to the top, unless, of course, you want to trade that last little bit, in which case you'd be looking for a trade line. There's none there. There's really none there on the 4-hour chart, but on the smaller time frames, you can probably find one. Yeah, look, it's a bit too strong for me. I think it's a little bit overbought at the moment. It needs to come back, and the daily pivot, monthly pivot area. If I were to see that as a tradable commodity, don't really have a good trade line at the moment. There might be one through here a bit later. This is the 30-minute chart after all. We could find something like that. We've had a big bearish engulfing bar. We've got a lower high right now. If we were to see a break underneath, retest, maybe that's the go for the day. Dollar CAD, I'm not that fussed. Dollar Swissy. Okay, dollar Swissy. Oh, finally we got a bit of a break on dollar Swissy. We've been trading this short for how long? When did we get into this? Let me go back here. Dollar Swissy. Dollar Swissy, there it is. Okay, we got into this on Wednesday, and it just took the longest time to take off, but finally it did on this breakout bar here, which gave us both TP1 and TP2. So if you haven't taken those profits, then I think that's probably a reasonable idea. We're bang on TP2 right now, so I'd be taking profit here if you haven't done that already. And I'm trailing this in my mind right now, not on anything specific. We are at a retest of the bottom of that range, and I do see a potential for this to go to the bottom of the bigger range, which is around about 92.90, so another 400 odd pips from here. They're not even about 350 odd pips from here, but nice reward. And as I said, when we took the trade, we won't get profit here, real profit, until we do get to the bottom of this range. But we're safe in the market. We're banked twice, and we'll have a winner here, which will be relatively small, or a decent winner if it gets to the bottom of that range. If you haven't traded it yet and want to get into a short, I would advise against that right now, because I don't see anything to trade off, to be fair, apart from the bottom of the range. And there's nothing in there, nothing else there to show me that that's ready to go. What I would counsel for very, very strongly is if we do come back into here and hit the weekly pivot and put in a higher low, that's going to give us a bull signal. And we need to watch that clip very carefully. But as well, I said I don't really see an opportunity to trade it short, but maybe tomorrow, if this looks like it does now, and you're not short, you might consider taking that as an A, B, C trade. That's still there, and really the only, you probably want to put your entry underneath here. That's the issue. Hang on a sec, I'll have a look at that. I'll definitely be having a look at this again tomorrow, see if I can scale into it. So your entry would be directly underneath that bar. Your stop loss, let's say above the weekly pivot at 65. Where's the monthly pivot? You'd even go above the monthly pivot, I think, back to 96.90 or something like that. So an 85 pip risk. Your reward is very, very slim. That's the issue that you would have. That's a bit of a problem. You could reduce your risk, of course, and trade the candle. Then you've got something to trade with, but a bit dicey. I'll have a good look at that in the morning, but yeah, look, it's possible to scale into this as a break and retest of the bottom of the range. It's not the best because of that reward factor, but it's not the worst either. Last one, Kiwi. Kiwi is looking good for a short right now if it were to give us the lower high of the daily pivot. Let me show you that a little bit clearer. So daily pivot sitting here with the weekly pivot. There's a bit of this going on, isn't there? It's interesting. I like it. I'm going to watch this candle. And if that, no, I really want to see this tested. I've got to say, I don't want to trade short against that. But if we can get price up to here, up to the pivots, and put in that candle there, that would be ideal as a lower high. Then we can look to trade it short. That's Kiwi US dollar. Am I keen, and have I got a fundamental bias, or have I got a bias at all? That's the monthly chart I'm looking at. And there's not a whole lot there to be confident in the Kiwi going long, is there, to be fair? And there's that break and retest of that previous range level, I suppose, around about 62 mark. I can't really say I'd be keen to trade this long. In fact, that looks like a lower high to me. That's the weekly chart. You have a look at the daily. Yeah, look, I think I'm prepared to wait, but that weekly candle looks interesting to me.
I'm with you on that, mate. I'm looking for a Kiwi short as well against the dollar.
I might even put a little trade on that, Ash.
Yeah, well, I'm gonna join you. I don't think I'll. Let me just have a look. Kiwi dollar. Where are you?
199, so 200 pips, and your immediate support's 320 away. I don't mind it. Okay. I'll put this on the EA because I'll be way too lazy to come back and check it. Oh, I haven't got an EA on this one, have I? All right, I'll just place the order. I'm going short Kiwi US dollar, and it's going to be at 59.85.
Yeah,
So
rate's not there, it's going, isn't it?
0.5985. And my stop loss, I'll just use the candle, will be at 61, let's call it 85. Give us an even 200. 61.85. And I won't put any profit levels in there, but I'll tell you what I'm going to do. There we go. So the first take profit is going to be 200. Yeah, I'm going to take my first profit at 55 pips. So at 59.30, I'll type it up, shall I? That's a good idea. Then I can remember it. Okay, Kiwi, US dollar. Want it bold, want it caps. Kiwi, US dollar. Sell at can't remember the level now. Was it 59.85?
59. I think it was 59.95, maybe. Are you trading? Which bar are you trading, mate?
I'm trading this bar here.
And so the lower that bar.
Yep, well, about 5 or 7 pips underneath it.
What's the time frame there? Is that 30?
That's a weekly chart.
A weekly, okay. Okay, the low of that bar is 0.5991, so 91.
Yep. Cool. So that's the entry level. Stop loss is 200 pips away, so that will be 61.85. And first take profit is 50 pips, yeah? 55 pips. Pretty sure I said. Now, when you get to that 55 pip mark, you want to take about a third off the table. So that's reducing your risk. And then TP2, I would recommend down here at the open of that candle. I'll put that in. TP2. Can you give me the level of the open of the bullish engulfing bar, please, mate?
Sure. Where are you? Bullish engulfing bar on the weekly. The open of that one is 0.5867.
No, the one right down the bottom.
The biggest. The bigger, yep. the very low is 0.5664.
5664. We'll make it 5658. There we go. So there's that one. If you would like to take another third off at that level, that would be my counsel, and then just let the rest rip. God knows where that will end up because I haven't even got it on the chart there. But there's a big chasm underneath here. So there's the trade. Sell at 59.85, stop loss at 61.85, TP1 1/3 off at 55 pips, TP2 1/3 off at 0.5658. And that is that.
Nice. Nice.
The rationale behind the Kiwi dollar short. Sure. Okay, we're coming back inside a range, so that gives me an immediate bias short because I want to trade it down to the bottom, right? But that's not the reason for this trade. The reason for this trade is we're on a weekly chart here, still got a short bias. Why? Because we're getting lower highs and lower lows, lower highs and lower lows. So there's a trend. There's no question about that. But not only have we broken clear of the previous range, which let's call that the previous range, we've broken it, we've come back, and now we've retested it with this candle. So the retest level is pretty much bang on where we are. I like that we've come back inside this range that I pointed out on the smaller time frame. So I really think that's an opportunity to get short. And I like the bar itself. This is one of my favorite lower high bars. So I'm actually trading the lower high, and I'm looking for, in the first instance, the bottom of the range, in the second instance, the low, and then we've got 2/3 off the table at that point. And if we get any bonus out of that, obviously we'll be trailing stops as well. So we'll lock profit in more than that. So that's the rationale I have.
Interesting, mate. What do you think about this? Now, I have got.
What do you got?
Well, let's just talk to the guys about this. Actually, now this is not anything we can trade, but it'd be interesting. You know, this is more of an exercise in thought process. So GlaxoSmithKline is a company that provides respiratory systems, and they are respiratory and antiviral systems as well as vaccines, and they've been on a rally, huge rally. And yet they are putting in a weekly engulfing bar at a pretty high level. So the question is, really, you've got a technical setup, but you've got a company that you know is incredibly prevalent in this particular time and era. So what do you do? The question is, what do you do? Do you think, well, okay, maybe I can square the circle by saying that we're coming out of it and there won't be so much use for it, or do you say this thing's still around? Or do you say maybe it's still around, but maybe there's a little bit of a relaxing in that, and trade it off the technicals?
That's a question to everyone, not to me.
It's a question to you and to everyone else.
Can I have a look at the chart?
Yeah, sorry, Mark.
I'm not going to make a statement without looking at the chart.
Okay, so let me show you the chart. Okay, here we go. Oops, that's the wrong thing to move. This is the one I want. So here is your chart here. Let me change this to the weekly. There we go. Right, where are we at? Let me take out the screen. So this is the interesting one here. This is the weekly. Now look at this weekly bar from last week. Yep. Massive, it's just engulfed everything. And also it's at this, it is at some levels, and we are seeing some weakness in the FTSE 100, generally speaking. But obviously this is a really key company, really, for the current environment. So, I obviously I already have an answer, but I'm interested to know what people think. Oops, sorry. Make that smaller for you guys. Interested to know what people think. What do you do in this? So LT saying go with the technicals.
Well, I'm going to go with the technicals over the fundamentals. But if the fundamentals are that strong that they're going to absolutely obliterate the technicals, then I'll go. Maybe.
Well, I don't think there's no specific fundamentals on the numbers with this one. I haven't looked at the balance sheet as yet. It's more the fact that of the environment we currently are in. Is there, enough to suggest that that the environment will probably trump anything to do with the chart right now?
Yes, definitely. In particular, if they've got are they in the queue with the vaccine?
Yeah, they certainly are. Yeah,
Then I'm not going to trade them short.
yeah. Yeah, I mean that's really the answer. Really for me is that you know, if there's a setup on something like this, then there are going to be much easier opportunities. So I would avoid it.
Yep.
Hedging's great, Helen. The question is, how do you hedge? How do you hedge something like this? And there is a way that you can hedge something like this. But yeah, hedging is always a great way to do it.
It hurts my brain, Helen. I have to have to stick. Well, it's not entirely true. I have done it and do it, but it has to be extreme circumstances for me.
Well, you know what, hedging. Let's talk about hedging, because actually hedging brings me back to gold. Brings us back to gold quite nicely. It's quite a nice clean entry back into gold. So let's have a look at gold today. Somebody's asking about gold. Now, gold is currently trending to the upside. You can see that there is a trend line here, just caging it in. Now, this is the thing with gold. This is what's been happening with gold. Gold has been weakening as the market has weakened. Now, look at this. This is when it's significantly weakened. I'm talking about. So this is the last day of April. This is the last day of April here. First day of May, a small rally, and then we're starting to move to the upside. Now, let's just check the S&P. This is the last day of April, moving to the downside. Sorry, this is the last day of April, moving to the downside. And then it continued as people were just starting to stabilize with gold. So what's been happening quite a lot is that while people have been buying stocks, they've been buying gold at the same time. So when the stocks come down, they start to sell their gold positions so they can hold on to their stocks. Now, let's just check this one. The 24th, this is the rally on the 24th of in the S&P. And this is gold on the 24th, which is... actually, let's look at this. So that on the 21st, the gold started to rally, and then it started to come down, just easing down sort of on the 24th. So it almost became a little bit of a flag in the situation. So gold was moving to the downside before the stocks were moving to the downside. So you know there was almost a little bit of nervousness going on already there. But the way that you would use gold really as your hedge is by, if you are going to be, you'd want to buy them both initially, and try and pick out where you can get into them. So if you can buy both gold and the S&P or some sort of indice, if you see some weakness in the market, then you can start coming out of your gold positions with profit to cover the downside in your indices. And the reason that I'm saying this is because indices are much more likely to go higher than they are to go lower. So given that, it means that people want to try and stay in positions, and the best way to stay in positions is by selling another product that they are already long in. So the hedge with gold is that you and it's difficult because you're almost not hedging at the start. It's not like gold will go up when the stock market comes down. They can come down together. But gold is something that you can use to cover the other trade. So if you're going long in the S&P, the idea would be to put on half your position on the S&P and half your position on gold, and you'll be looking at both of them to move to the upside. And then as the S&P, you know, and if the S&P starts to roll over, then you start to come out of your gold position to cover it. But you know, just at this particular phase, it certainly looks like gold is much more likely to come down than up. Now, with that, you can do the same thing coming down. You can sell out of gold and sell out of the S&P, because if people are selling their gold to cover their longs in the S&P or the global indices, but the global indices are weakening, that means gold will probably continue to weaken as people try and recover some of their money. So what you want is a trade in tandem with the two, and then what can happen is that the S&P could go up and gold could come down. You know, so you might end up winning out of both of them anyway. But what you're trying to look for initially is a tandem trade, putting on 1% of your account between both products. It's a little bit complex, but yeah, you buy both together. Exactly. You buy both together and you sell both together. And then what you're trying to do is protect your indices. So gold isn't there for the trade; it is there to protect. Yeah, well, this is what people have been doing recently. Now, that's not always the correlation, but that's certainly been the correlation recently. And there are times where that correlation will flip, and you'll do you'll do the seesaw instead. No, they won't. They won't look the same, and this is why you are. And this is where it gets quite complex, and you have to do some maths on this because you are trading the spread and not the price, which is where it gets a bit more technical. You're trading the spread position. Yeah, it can be. I mean, the best way to think about it is maybe not even the best way to, but a way to think about it is that let's say that you've got, forget this one for right now, but a classic way to hedge is what market makers will do, hedge companies will do, is that they will buy, let's say they buy Tesco. Now Tesco is so that's a buy. Tesco is a supermarket. You buy Tesco and you sell Sainsbury's, which is also a supermarket. So you sell that. Now, what you're looking for it to do is this to outperform this. Now, the hedge comes into play because if this goes up, let's say this goes up by, that goes up 1%. But this one only goes up 0.5%. Sorry, that shouldn't be there. That one goes up 0.5%. Then you make money. You make 0.5% on that. But what you are effectively doing, what hedge companies will do is hedge out the short. So let's say you get some sort of collapse in this industry, not in Tesco, but in the industry. So let's say supermarkets all of a sudden start doing really badly because they've picked this one out as the weaker. What they're saying is if this one comes down 3%, this one will only fall 2%. So you've protected your Tesco position. So you are effectively you are hedging the spread between this and this, not the actual price, because they won't be at the same price. The chart won't look the same. They will move in a different rhythm, but the spread between this one and this one will be fixed. That's probably something for another day, but that might be something that people can consider. Now you can do it with currencies as well. But you're kind of already, in fact, a currency. You are effectively trading the spread with a currency, because as you trade the dollar long, what you're saying is, relatively speaking, the dollar will be stronger than the yen's weakness. You know, so you are always trading against two. And what you do with hedging, with what the hedge companies do is effectively they do the same thing, but with stocks. They'll buy the dollar and sell the yen. They'll buy Tesco's and sell Sainsbury's. And what can happen, and the way that the dollar yen will explode, is that you will get a really strong number from the United States, while at the same time everybody starts to sell the yen. You know, so that's where the gap really does start to become quite huge. But what can happen is that the yen will show some strength and the dollar will show some strength. So you might make a little bit of money while that's going on, but that's because both of them are fairly positive at the time, but the dollar is slightly stronger than the yen. So you're always, in some respects, you are always hedging, but you know, it's kind of one of those things. You're always trading the spread, but you're and the spread between the weakness in one and the strength in the other. But hedge companies will do that on a slightly different level. Yes, you can. If they both move in tandem, then you're hedging the collapse in some respects. So with a dollar yen, if they both move in tandem, then they don't move. So you're hedging one against the other in some respects. So if Tesco was to go up and Sainsbury's was to go up, what the market makers are saying is Tesco is stronger, so it will go up more. And that's how they hedge out their risk. Don't make quite as much money, but they don't lose as much money if there's a collapse in that industry or if there's a collapse in the stock market. Now you can hedge out stock markets, you can hedge out industries. You can't hedge out the actual supermarket itself, unless you use options, which is a completely different technique. So it's food for thought, and it might be something that, it's one of those things that I'd like to plant the seed and let you guys figure out if it's something you can use. Not necessarily fad, because you might choose the wrong currency. You might choose the wrong supermarket. Let's say you go long Sainsbury's and short Tesco. Tesco outperforms. Short Sainsbury's, long Tesco. Sainsbury's outperforms. Then you're in all sorts of trouble. So there is still what they are doing is not hedging out the company's performance. They're hedging out the sector with that. Now, if you wanted to do the same with that's why they're paid so much money, LT. And it's a completely new skill, but it's a seed that I'd like to plant for you guys. It's food for thought, so that it's well worth thinking about. Is there a way that you can actually use it for your trading? It does open up a whole world of different analysis that you need to do, but it is something that can be done. And if you're talking about hedging out a spread between two currencies, you might go long Kiwi dollar and short, let's say Euro Kiwi, short, long Kiwi dollar and long Euro Kiwi, which means that you're hedging out the Kiwi. But what you don't have is a hedge against the dollar or the euro. So you can't really do it so well with current. There is a way, but it does become quite convoluted. It's really something that that hedge funds do.
Told you, gives me a headache.
Anyway, mate, I'll leave you with that headache. What kept you awake last night?
I'll tell you, in the US session.
Oh, okay. Yes, of course. All right. For those of you joining us in the US session, we'll see you there. Maybe we'll just continue the discussion about hedging.
I'll give you a hint. No, okay, I'll give you a little one. It's a real quick one. Are eyebrows considered facial hair?
Okay. All right. Well, we'll leave that hanging. Leave that hanging. It is on your face, so I don't see why it wouldn't be. But you've obviously got a way around this. Okay, we'll get to the answer in the US session, and we will see you, the rest of you guys, same trade time, same trade channel in the morning. Stay safe, have a great afternoon, and whatever time it is where you guys are, and we will see the rest of you for this afternoon session, and I will see you then as well. Jeff, have a good one, buddy.
Right, mate. I'll be doing my best to stay awake, and it is Monday to struggle for me, I tell you. Yes, and maybe is a great answer, Helen. Have a good rest of the day. Bye-bye for now.